Okay, so today we're going to look at three stories in fintech that, on the surface, seem totally separate. We've got a wild new mortgage, some absolutely insane earnings from an infrastructure company, and a bunch of huge deals for a big-name lender. But here's the thing, they're not separate at all. They're actually all clues pointing to this massive, fundamental shift happening in the world of finance right now.
And this quote, man, it just perfectly captures the scale of what we're about to dive into. The idea here is that the very foundation of finance is changing, and it's starting with the single biggest asset most of us will ever own, our homes.
All right, first up, Coinbase. This is where we see crypto leap off the trading screen and right into the real world of consumer finance. And honestly, it's changing the entire game for how people can get their hands on capital.
Now, the partnership itself is pretty big news, but the real headline, the part you have to pay attention to, is those last three words, accepted by Fannie Mae. Why? Because Fannie Mae backs like half of all U.S. mortgages. This isn't some tiny niche product for crypto diehards. This is a green light for this to go totally mainstream.
So how does this thing actually work? Well, it's brilliantly simple. Instead of having to sell your crypto to get a down payment and then get hammered by a huge tax bill, you just pledge it. You use it as collateral. That's it. You get your mortgage, you get to keep your crypto, and you totally sidestep the capital gains tax. This is a complete and total game changer.
And this slide just lays it out perfectly. On the left, you've got the old way, right? You're forced to sell an asset that's probably going up in value. And then you have to give a big chunk of that to the government. But on the right, you have the Coinbase way. You get to use the value of your asset without ever selling it. You keep your long-term position, you get the house. It's the best of both worlds.
I mean, what a perfect analogy. It totally captures this massive power shift. You're not just a seller of an asset anymore. You are the owner of an asset that's now working for you. Your Bitcoin isn't just some number in a portfolio. It's now a tool, a productive tool for building real wealth in the real world.
So the bottom line here is that crypto is graduating. It's not this little alternative financial system off to the side anymore. It is becoming a deeply integrated, really powerful part of the main system. So if crypto is plugging into the consumer front end like this, what's happening on the back end? Let's look at the engine that's going to make all this possible at scale. Right, so if Coinbase is the consumer revolution you can see, BitGo is the invisible engine that's driving all the institutional adoption. This is the stuff that happens behind the curtain, but it might just be the most important part of the whole story. And the numbers, well, they are absolutely staggering.
Just look at this, 424% year-over-year revenue growth.
904% increase in adjusted EBITDA. That's a core measure of how profitable the actual business is. Just incredible.
And who's making this happen? Over 5,000 institutional clients. We're talking banks, hedge funds, the big asset managers. They more than doubled their client base in a single year. The big money is no longer coming. It is officially here.
So what in the world is institutional infrastructure? It sounds kind of boring, right? But think of it like this. Think of Visa. When you swipe your credit card, you don't see the insane, complex network making it all happen. It just works. Well, BitGo is building that same essential, invisible plumbing for the entire world of digital assets. And here is their secret weapon, their fortress, their competitive moat. BitGo is literally in a category of one. Being federally chartered by the OCC gives them this stamp of regulatory approval and legitimacy that is almost impossible for anyone else to copy.
So the takeaway here is really, really simple. Next time you hear the phrase institutional adoption of crypto, this is what it actually looks like on paper. It's not just a headline. It's a 424% revenue increase.
Okay, so we've got the consumer revolution, check. We have the institutional engine, check. But for this new reality to really stick, Wall Street needs a business model it understands and trusts, one that's built to last and is less about taking on crazy risk. And that brings us to the third piece of this puzzle, SoFi and its capital-light playbook. Get this, SoFi just locked in over $3.6 billion in new loan platform deals. And just look who's signing on the dotted line. A global bank, a massive insurance group, a top 5 asset manager. These are the serious players, and they all want a piece of SoFi's loan-making machine. And this slide really breaks down the genius of their model. On one side, you have the traditional banks. They make loans, and they have to hold all that risk on their own books. But then you have SoFi's platform model. They create the loans for their partners, they collect a nice fee for doing it, and then they move all that risk off their own balance sheet. It is a lean, mean, fee-generating engine.
And I love this quote because it perfectly sums up SoFi's strategy. It's the Drake pivot. Instead of trying to be everything to everyone, they are just doubling down on what they do best, their tech platform, and they are finding smart ways to monetize the heck out of it.
So the crucial point here is that in a market that is terrified of risk right now, SoFi just showed Wall Street the power of a business built on fees. It's sending a clear signal that there's a durable, profitable way to do fintech that doesn't rely on taking these massive balance sheet risks.
All right, let's bring it all home. Let's tie these three stories, Coinbase, BitGo, and SoFi together. Because again, these aren't just random separate events. They are three really powerful, interconnected signals of a completely new financial reality.
So let's recap. First, Coinbase just kicked down the door to the single largest consumer asset class there is, real estate. Second, BitGo's insane growth just proved that the institutional plumbing isn't just built, it is now scaling at a pace that is frankly hard to believe. And third, SoFi showed everyone a mature capital-light model that's all about predictable fees, not unpredictable risk.
And all of that leaves us with this one final, pretty provocative question. This transformation isn't coming, it's already here. So if your crypto can now back your mortgage, and the institutional plumbing is printing billions and billions of dollars, what part of traditional finance is actually safe anymore?